Fibonacci Lesson 4. Learn Forex combining Fibonacci with other technical analysis tools. Since drawing Fibonacci retracements is very subjective, it's useful to combine it with other technical analysis tools. Combining fibs with polarity change. A great way to use Fibonacci retracement is to look for the fib levels which interact with old support and resistance lines, like here. Price broke the previous highs and started pulling back. The old resistance should become the new support, so you might be going long on the retest of this level. Many traders have problems choosing their stop-loss levels. Fibs are especially useful in situations like this, as you can simply put your stop-loss a couple of pips below the 61.8% retracements. Combining fibs with trend lines and channels. Take a look here. The price is in a strong uptrend. After making the next leg higher, you need to wait for a retracement before going long. By drawing fib retracement, you can project the potential point where the price will hit the trend line and set your buy orders there. Combining fibs with RSI. We've already learned how to use the RSI momentum triggers to help us determine price reversals. Combining that with fib retracements works like magic. Take a look here. The price is stalling at the 38.2% fib retracement. Normally, it would be risky to sell based only on fib retracement as it could go up further. However, as the RSI has already broken the bullish momentum, it's signaling that the retracement uptrend has finished and the price is ready to resume its downtrend.